Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, April 8th, 2024. As always, we'll start with the executive summary from today's lead-off morning note. If you would like the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So we'll start with today's key macro event, which is previewing potential monetary policy changes in China and Japan. So the nuance there is a calm start for markets ahead of a very busy week of macro and micro catalysts. So we get China credit data on Tuesday. We have China CPI, PPI, and US CPI on Wednesday. The ECB meeting and US PPI on Thursday. And then we have Germany, France, and Spanish CPI, as well as US bank earnings on Friday. Elsewhere, Japan's monthly cash earnings growth accelerated to 1.8% year over year in February, an 8-month high, and nearly 4 times the trend rate of 0.5%. So, in terms of market implications, investors will be watching for signs of incremental reflation in the Chinese economy as a potential threat to global liquidity via a less active PBOC. In case you missed it, we performed a deep dive on Chinese economics and liquidity dynamics in Saturday's Around the Horn presentation. Elsewhere, the latest wage data in Japan will threaten to accelerate the pace of BOJ policy normalization. That the Japan's March CPI data on the 18th will also be telling ahead of the BOJ's April 25 to 26 meeting. The 10-year nominal JGB yield broke back out to bullish bands, bullish from the perspective of our volatility adjusted momentum signal last week, perhaps an indication of incremental tightening in the pipeline. Transitioning to our 42 macro dashboard, as always, wrapping up with a question from our community. This one's on Bitcoin and liquidity. Reads, hello, Skipper. I have a question for you. I believe you've mentioned it already a few times, but I searched and did not find. So when global liquidity increases or decreases, how long does it take to affect the Bitcoin price? In our opinion, liquidity has ever only been a coincident indicator of asset markets. Liquidity up is, asset markets up, liquidity down, asset markets down. I would not be using liquidity as a trading vehicle. One, because unless you have the sophisticated tools and the data tracking to actually anticipate fluctuations in liquidity on a short to medium term time horizon, you're going to struggle using liquidity as a specific thing to trade. But it is a tangible thing that you could use to construct themes and narratives around and help you understand the fundamental backdrop better. Typically, assets are rising when liquidity is rising. Typically, assets prices are falling when liquidity is falling. And this is not just for Bitcoin. This is generally speaking for most assets. We look at our 42 macro global liquidity proxy, which is the aggregated sum of global central bank balance sheets from all the major economies, their broad money supply growth, as well as their broad money supply, and as well as their global FX reserves minus gold. When you aggregate that into our global liquidity proxy, we find that most asset markets, pick your asset class, doesn't matter what asset class it is, they're highly co-integrated with global liquidity. And so we see that as a coincident indicator of markets. And you do, again, need sophisticated tools, data tracking to actually anticipate changes in the trend of liquidity, which is something we do and specialize here at 42 Macro. And then lastly, also is Bitcoin price more affected by interest rates or inflation or the expectation of inflation? So it's an interesting question there. The one thing I'll say is that what drives asset prices changes over time. So the principal components of asset prices are typically the same when you think about growth, inflation, policy, liquidity, fiscal policy, credit growth. Those types of things and interest rates, those things tend to be stable. The actual principal components tend to be stable, but on any sort of cross-sectional time horizon, you could have the order of those principal components could actually be different. So, for example, right now, what's the dominant driver of Bitcoin on a trend basis is global liquidity. Prior to this most recent, trailing 3-month period, what was the dominant driver of Bitcoin were cyclical inflation expectations, i.e., as inflation expectations rose, Bitcoin would go down, and then vice versa. So you have to, monitor how these things are changing and evolving over time, so that you can better understand the themes that are driving asset markets, and more importantly, better understand how the positioning cycle. If something changes in terms of the drivers, and you have a strong view on the direction of a potential driver, you can then understand how positioning might come either get built or erode in a particular asset. So this is all stuff that we study and report on daily in our positioning model in the lead-off morning note, and then obviously every Saturday in Around the Horn. So we'll wrap it up there. Darius Dale presenting our macro minute for Monday, April 8th, 2024. Check me out at 3 p.m. today. I will be on the Liz Clayman show, the Clayman Countdown on Fox Business. So looking forward to unpacking that. and then hopping out and going to enjoy some solar eclipse this afternoon. So everyone have a wonderful day, and catch you back here tomorrow. Cheers.